What's going on, YouTube, traders, investors? Today we're going to look at 7 tech stocks with a dividend yield of above 2%. Let's get into it. Okay, and the first stock in the 7 tech stocks with a dividend income ratio above 2% is AVX. And I'll zoom back out, and just looking at this chart, there's one glaring thing that I see. I'm not investing in AVX, but it's going to zoom back in right here, and this straight down red line. Basically, that was a miss on earnings. I think they believe they met the top line, but came in short on the bottom line of a few million. But basically, AVX is a technology company that makes capacitors, transistors, connectors, all that stuff that's on a circuit board inside your tech. There's a good chance that AVX made some of it. And AVX sports a 2.6 dividend yield, I believe. Yeah, 2.6, which isn't bad. Not bad for a tech stock. Biggest thing I can say is it's technology. You probably use something that AVX made every day. And you should look at this as an opportunity to get in on the dip. Buy the dip if you're looking for dividend in tech, because this is not a bad one, not a bad play. The next stock on the list of 7 tech stocks that have a dividend yield above 2% is going to be Seagate Technologies. And as you can see, this is the 180-day chart. I actually was in Seagate for part of this run right here. I'm out now. And there's another glaring thing on this chart is this down pattern right here, which, you know, Seagate is a hard disk drive maker, a solid state drive maker. They're in the chip semiconductor sector. And they're cyclical. But the one thing I will say about Seagate, and one of the main reasons I did get into them at one time, was because of the over 5% dividend yield. They have a nice dividend yield. Nice. 5.6 to be exact. Like I said, they make hard disk drives, solid state drives. They're in competition with Western Digital, Micron. But like I said, it is cyclical. And this right now is probably a dip that you want to get in, because I think this is going up. I mean, they basically all your technology stocks kind of hit that bottom, and they've gained, I don't know, 20, 24, 30%, somewhere around there. They've gained a lot of percent. We'll leave it at that. So I think this is a dip that you buy. Especially if you want a good dividend stock. Get in at this price. But I would give it a couple days. You know, I think this is kind of reaction from Intel, because Nvidia's down. Intel had good earnings, but their guidance was not there. Their guidance, especially in China, wasn't good, and they paid for it. The next stock in the list is going to be Qualcomm, and you can look at this 180-day chart, and it'll tell you a story. Let me just zoom in. There you go. That was the story on the 16th of April. That parabolic line straight up. All the way to a high of like 88 something. 88.63 to be exact. Qualcomm. I think they sport a over 4% dividend yield. Over 4%. 4.6 to be exact. What can I say about Qualcomm? I've done another video basically talking about Qualcomm and how their 5G chip, modem chip, how they went to court with Apple, and on the 16th, during the court process, Apple decides to settle with them. So that basically that injected billions of dollars back into Qualcomm that they were being sued for, and all that. Like it validated Qualcomm and why they're so important in 5G. Like I said, 4.6 dividend yield. I don't know if necessarily is the right time to get in. I would probably wait for a dip. I mean, they hit that high just the other day, 88.63. But it's definitely a good dividend play, and a great company that has a lot of future ahead of them, especially with 5G. Next on the list is Iron Mountain Inc. Our ticker symbol IRM. Another one that, just glancing at the 180-day chart, you can see that something happened. I believe it was a miss on earnings, but you can see they were up here in the 36s, and now they're down in the 32s. So might be an opportunity to get in Iron Mountain, because the big thing about Iron Mountain, they pay over a 7% dividend yield. I think it's like 7.1. Iron Mountain basically stores paperwork for companies. I think we all know that there's not a lot of paper nowadays, but there was a lot of paper generated. And then nowadays everybody's e-signing everything. But they stored the paperwork for like 90-something% of the Fortune 500 companies. They still do business with 90% of the Fortune 500 companies, which is a good thing. Now, granted, paper is going away. Everybody's digital signing everything. But Iron Mountain is catching on, and they're working on their cloud business now. So they have a 7.1 dividend yield, which I can't say anything else about it other than awesome. Yeah, check them out. Like this is a dip that you could probably buy if you're looking for a good dividend. And you'll see on a lot of other videos, a lot of people talk about Iron Mountain. You'll see a lot of investors invested in Iron Mountain. So check them out, do your due diligence, but it does look like a pretty good dip to buy. Okay, the next stock is going to be Nokia. I think everybody's heard of Nokia. I'm not invested in Nokia. But as per the other stocks, when I look at this 180-day chart, I see something glaring. This is like a gap down on earnings. I guess the earnings weren't expected to be great, but they were not good at all. And as you can see, they paid for it. Don't know a lot about Nokia other than they used to be in the cell phone business. But I'm just going to go over what they pay as far as a dividend yield. Nokia pays a 3.9% dividend yield. It's not bad at all. Not bad at all. Like I said, I don't know a lot about Nokia now, other than I know they have a big play in Europe, I believe. They're working on a lot of 5G stuff, so could be some potential for some investors, especially with that dividend yield of 3.9%. It's a very cheap stock too, so I don't know. Do your due diligence on this one and see if it's worth it. I mean, it's a little gap down. Let's see. About 10% drop in Nokia. Like I said, the only thing I really know about Nokia nowadays is what they used to be. But like I said, they have their presence in Europe, working on 5G. Possible 5G play. All right. Next on the list is going to be a company called Infosys, ticker symbol INFY. I'm zoomed in a little bit on them. Let's see. So you could look at that 108-day chart, and we do have a bit of a dip. Probably an earnings miss, if I had to guess. I haven't done a lot of research on this company. I'm not invested in this company. I don't know a lot about this company. I know they're based out of India, and they sport a 3.1 dividend yield percent. Let's read a little bit about them. In simplest terms, India-based technology company Infosys is a technology consulting and service provider. From blockchain to big data to business transformation, Infosys can bring a lot to the table. Blah, yada, yada, yada. Like I said, don't know a lot about them. $10 stock with a 3.1 dividend yield. It goes on to say, while you hear a great deal about incredible ways companies like Apple and Microsoft are changing the world through the use of technology, the fact of the matter is most organizations have neither the ability or the desire to create their own technology-based solutions. They're more than content to lean on the likes of Infosys and pay handsomely for what it does. So there you go. They're a technology-based company in India. Do some more research on this company before you invest in them. Well, like I said, they do have a 3.1 dividend yield. They are on a little bit of a dip. That's all I got. And the last stock on the 7 tech stocks with a dividend yield above 2% is going to be Cisco. And just looking at this chart, I mean, it's set up pretty nice. Pretty nice. It looks like right now, we can zoom in, it's dipping on the 50. And it looks like it's hit the 50 a couple other times and bounced. Every time it looks like it bounced off the 50 in the past few months. So right now, it's probably a good time to get in. And another thing about Cisco, they pay, I believe, almost a 3.3% dividend yield. We could look a little closer. And yes, it is 2.7%. And pretty sure everybody's heard of Cisco. Cisco's into the networking. You know, they're cloud-based. They have a lot to do when it comes to you getting on the internet. Cisco. We'll read a little bit about them just for a little bit. Yes, the iconic king of networking world, Cisco, is also a respectable dividend payer. Granted, the yield of 2.7% isn't sky high. It's also a relatively new idea for the old company. Cisco only started paying any kind of dividend in 2011. Cisco takes its cash flow sharing pretty seriously, though. And more than that, it is shifting its business model in a way that's geared for paying a dividend. That's good news. That's good news. What can I say about Cisco other than we can look what the chart says? It says it's on an upswing, strong upswing, possible dip right here. I mean, if you want to get in on Cisco, we'll look at Cisco a little bit more. We'll analyze it. The street has a buy, market edge long, CFRA 4 stars, research team a hold, credit system neutral. But for the most part, it's pointing towards a buy. And we can look at the dividend. You're getting about 33 cents per share per quarter. So like I said, a 2.7 dividend yield. Pretty good play. And with that being said, this is the end of the 7 tech stocks with dividend above 2% yield. If you like the video, you want more like it, let me know in the comments. Also, like, subscribe, hit the bell. And also, let me plug Robinhood again. Robinhood trading app. You get it on your phone, Apple, iOS, Android. You can trade for free. And I'm going to provide a link below where you can use that link. You'll get a free stock. I'll get a free stock. And it's all good if you sign up with that link. Anyway, thanks for watching and see you in the next video.